Now in this next lesson on the price action patterns, this is the last one. It's part 4. And we already looked at, let's recap, triangles in part 1, head and shoulder patterns in part 2, and double tops, double bottoms, triple tops, that kind of thing in part 3. In part 4, we're covering the next thing, which is flags, flag patterns. Okay, they're very similar to triangles, such as falling wedges or rising wedges. Same kind of thing. A flag pattern is very similar. It's just a tiny bit different, right? Instead of being a wedge, it's more of a flag, you know? So it does have the same purpose. It's still very common in the market. However, I do find that, you know, triangle patterns are a little bit more common, but you will still see flags, you know, and they do have a part in the strategies, in a couple of strategies actually, that I will be teaching you in the coming up lessons. So again, it is important, it is good to know. So with that said, guys, to explain flags further, let's have a look at the charts. Okay, so now when we're going to look at the charts, we're going to be looking at price action patterns, which are flags. Okay, so we looked at already triangles, head and shoulder patterns, double tops, double bottoms. Now we're looking at flags. Flags are very similar to the pattern falling wedges and rising wedges. They have a very similar concept, meaning that they're continuation patterns. So let me first draw out some for you guys again, just like we did before. So assume a bullish trend, right? A flag could be horizontal. It's called a flag because it looks like a flag. You know, so it could look like this, where all of a sudden price action starts bouncing and forming this range, this ranging market, or a channel. This is also called a potential channel. Okay, and then this could break out to the upside. Okay, and she could be here as a more of an aggressive play, or wait for the retest and then continuation. So that's one type of flag pattern. Another type of flag pattern, assume another bullish trend, and it'll be kind of a falling flag. Also, the lines are perpendicular to each other, and it looks more like this. So it's kind of like a falling wedge, but instead of diagonal lines, they're even, you know, they're perpendicular to each other. And here we go, a falling flag breakout to the upside. It's a continuation pattern. Okay. Now the same thing could be obviously the reverse, just like we've seen with the previous lessons. You know, we can obviously get a bearish trend and then get this flag at the bottom. And then price action within that. And then a breakdown. Or we can obviously get, again, bearish trend. With this type of flag. And then a breakdown. Okay, so these are flag patterns. Pretty simple. Again, now you should already be familiar with patterns. So again, we got bullish flags, bearish flags, falling flags, rising flags. Okay, so they are all pretty much continuation patterns. They can obviously be reversal patterns as well, but they are mainly continuation patterns. They are just pauses in the market. Okay, small retracements in the market as well, like these falling flag, rising flag. That could be a wave 4 pullback and then a wave 5 continuation, right? So we could be looking at these type of patterns, specifically these ones. I very rarely trade these patterns themselves because I don't like trading this far into a trend, as an example. But if there's a pullback, because to me this is not a pullback of a trend, but if there's a falling flag or a rising flag, this would classify or qualify under one of my strategies, which is again the advanced continuation breakout, which is the last strategy that you guys will learn, one of the last strategies there. You know, so that is what they look like. It's simple. They're just flags. Okay, so let's have a look at some examples, and they're very common. Okay, they are very common. And, you know, let's have a look at this example here. And this is, we looked at this initially as a potential head and shoulder pattern, right? But it ended up turning into a flag with a breakout to the upside, you know, eventually turning into a flag. So we were in this bullish trend, and then we had this pullback. Remember, this was the head and shoulder pattern, left shoulder, head, right shoulder, and it broke down, broke the neckline, but it didn't go too far. And all of a sudden it created this small channel, and then ended up breaking up to the upside, retest, and continued higher, right? So this is again a falling flag, continuation to the upside, right? And it didn't get too far. That's why it's like not my favorite patterns to play, because they happen so far into a bullish trend, but I don't typically like to trade them, but they do qualify under one of my strategies, and they do present themselves. So one thing to understand though is that typically when you have a pullback, and we're going to be digging into this pretty much next, we're coming up into full multi-time frame analysis lessons, you know, and at that point everything will start to make sense fully. And that's when, this is just basic stuff, which to some of you guys it's already might be some good information, but once we start digging into multi-time frame analysis, then that is where literally the beauty lays. And with that said, a pullback, you know, you can see here on a weekly chart, top right, we have a pullback in the market. It's just a pullback. It's just a retracement, you know, to the 20 EMA. But what was it on the lower time frame? On a daily, it was this flag pattern, right? So almost every single pullback is a flag. Like as an example, this pullback right here on the daily chart most likely would be a flag on a 1 hour or 4 hour, or a falling wedge, one of those. You know, literally look at any pullback, that typically on a lower time frame would be some kind of a flag or a wedge type of pattern. Okay, so even though they might not be present too much on these higher time frames, this is a flag. You know, this is a flag. To me, it's just a pullback looking at a daily chart, but if you look at a 4 hour time frame or a 1 hour time frame, this will either be a flag or a falling wedge, one of the two. Okay, so they are very common, specifically when you start digging into the intraday time frames and such. Let me see if I can find another example. Remember here we have that falling wedge, okay? Well, there was a flag here as well on a daily chart. Here we go. You know, so just a random example that I picked up on, and here it is. You know, so that's one of those flags that are just fully sideways, creating that ranging market, right? And then you have this break and retest. Here we go. So here's another example of it. You know, so we're in this bullish trend, which is kind of like the arm, the stick of the flag, right? And then you got the flag, and then a continuation higher. This ended up continuing quite a bit, right? So you most often would either play the breakout or just the retest of the flag, which would be right here. And then you take that as a continuation. Okay? I don't trade them too often, specifically these ones. I want them to be a pullback, you know. And you guys will see many examples of that. But this is kind of what a flag looks like. It's just a pause in the market and then a continuation higher. I love seeing it on a lower time frame. You will see it a lot with the phase line strategy that I will teach you guys as well. Flags, falling wedges, they're very common with that strategy, but also with that advanced continuation breakout strategy, you will see flags, falling flags or rising flags, and then falling wedges and rising wedges. You will see them a lot within the advanced continuation breakout strategy. So be familiar with it, but there's not much really more to say about these patterns. You know, they're good. They're continuation patterns. I personally not a big, huge favor of them because they just happen too far into a trend, and I like trading the beginning of the trend. That's where the biggest opportunities will be. But, you know, there are strategies that, you know, we will be utilizing these type of patterns, so it is important to know them. So with that said, that is it for this lesson. A very short one, and I will see you guys in the next one. Take care.